And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal. The full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, it's that time. Good morning.
Good morning.
Maybe good evening, wherever you are. Welcome to The Real Investment Show. It's Financial Fitness Day. I'm Jonathan Penn, certified financial planner. Joining me in the arena this morning is Matt Doyle, also a certified financial planner. Hey, Matt, how you doing?
Good. How are you this morning?
Hey, I'm good. Listen to the voice, the deep bravado of Matt Doyle. Do all of us CFPs here need to have a radio voice in order to be hired on by the firm? Is that a prerequisite? All these pesky certified financial planners we have running around in here, poking and prodding at Lance during the week. Maybe we do all need to have a radio voice. So Matt Doyle, let's see, Matt Doyle. His initials are MD, which means the financial doctor is here in the studio with us this morning. Matt, we appreciate you making some time here.
Glad to be here. Thanks.
You bet. So quick look at the markets here before we get started. Matt and I have a lot to get into today. You know, Matt and I are on the same team here, and we visit with individuals and families on a regular basis together. Matt and I visit every day, throughout the week, and we visit with a number of individuals and families throughout the week. So we thought we'd kind of share with everybody, what are the things that he and I are visiting with and talking about with clients, with individuals and families that we serve. What are kind of the common themes, or what do our conversations look like, and what questions are we discussing? So we want to kind of give you a peek into that today. But before we do that, markets so far this morning looks like seeing a little bit of green on the screen, which is good. So futures for the Standard & Poor's up about 10.75. Looks like NASDAQ's up about 59, almost 60 here. The oil's up, a little over 1%. Been following the 10-year, the yield on the 10-year Treasury. It's ticked up a little bit at a 3.86. Of course, markets I think today are going to be looking at the economic data coming out today, U.S. non-farm payrolls, the unemployment rate, hourly wages, all going to be announced a little bit later today. And how does that kind of all work into the mind of the Fed, right? We got 2 more Fed meetings before the end of the year. Will there be some additional rate cuts? We'll see. Will there be a 25 basis point reduction in November? Will there be another one maybe in December? I think the Fed, as of late, has made it very clear that they remain to be very data dependent. But it's interesting, Matt, our oldest daughter, she graduated college last year, and she's in her first official post-college career. She's been there for just a little over a year.
Okay.
And she's an underwriter. She's a credit analyst for one local bank here in Houston. And we were talking a little bit last night over dinner, and she said, "Hey, Dad, we're starting to see a real increase in inquiries on folks that are wanting to apply for or look at loans, whether that's individuals, but primarily small business."
Sure.
Right. And I said, "Well, it's interesting." I said, when did this surge, or when did this interest really come in? She said it was really after the most recent Fed interest rate cut of 50 basis points.
Okay.
That's the fancy way they say it, 50 basis points, 0.5%.
Sounds huge.
Sounds huge, right? Yeah. But I thought it was interesting that just after one cut of 0.5%, that they're starting to see this inflow. And now the bank is already thinking about, they're looking ahead here a little bit, and they're starting to think about, well, maybe we need to bring on some additional staff and some additional lenders. But I thought that was pretty interesting just after one interest rate cut as of late.
Sure. So what does that mean? What does that tell you?
Well, if folks are wanting to look for credit, especially in the small business line or the small business area, folks are wanting to grow, wouldn't you think?
Sure. People want to work. Businesses, small businesses are the fuel of the economy, aren't they?
Yeah.
Major employers. So it's good, right? Growth in the economy and people interested in making a living for themselves and going out on their own.
Agree. So something else too. So our youngest daughter is a student. She started her senior year in college, and actually she's attending your alma mater here in Houston. And
UST?
That's it.
UST.
It is UST. That's correct. It's UST. So one of her classes is supply chain management, and she's finding it very, very interesting. And as of late, they've been talking a little bit about the port strike, right?
Sure.
And I saw yesterday that that the port, with the workers there, that there's a tentative agreement now where they're in some negotiations, right? So it looks like hopefully what's been going on in the ports, it's not going to turn into a much longer, drawn out issue that maybe folks are starting to worry about here. Hopefully there'll be some quick resolution to this. So it looks like as part of this tentative deal, there's some agreements that are being discussed to increase the wages of all of the professionals that are working in the ports there.
Right.
But our youngest daughter, Andy, she got home, she was like, Dad, we were talking about this in our supply chain management course, and she said, I didn't realize that the folks there, man, they make a pretty good living.
Right.
Right?
Sure. And it's there's been this push, I guess, over the last 50 years that it's gotten to the point where a college diploma is sort of getting your ticket punched, right? That's your ticket on the train, as it were, to a successful future. And now we see, and a lot of clients and their kids that we're helping them come through, come out of school saddled with terrible debt, right? And so there's this massive hole that they find themselves in when one can go and these blue collar jobs are paying quite well. And it's similar to, you talk about the small business. It's similar to, opening a new restaurant. Somebody will go out and spend, $750,000, $500,000 in a build out, fancy tables, fancy tablecloths, silverware, all of that. And then all of a sudden they're in a hole before they've even sold a plate. Mm-hmm. And the really successful places are the ones that make excellent food, but I mean, they might have found the chairs in a scrap heap or, at a swap meet, and they go slap a coat of paint on there and they keep their overhead really low. So if somebody comes into a blue collar job, a welding job, whatever it is, making $120,000, $150,000, $170,000 a year eventually, right? Because the way I read these increases in salary that they've negotiated, they step in over a certain period of time.
Mm-hmm.
You have to have a level of tenure. You don't just come into the job at the port making that level of income. But to be able to get there with none of that overhead, none of that student debt, I mean, that really sets them up for a successful future, a successful career. And so a lot of kids, I think, these days are looking at that, giving it a hard look. Do I really need that, degree in social studies?
Yeah, I mean, so if you look at the average cost of a 4-year in-state, like 4-year public college, I mean, the average cost per year right now is about $27,000 a year in-state for somebody staying on campus.
Yeah, that sounds right.
Over 4 years, that's what, $108-ish thousand?
Sure, and you're not even taking in room and board.
That's it. And so you got to think. So I think students these days are looking at, well, is it worth that investment for what I'm going to, should I saddle myself with that debt? Or now, I mean, look at Waller High School here, just in the Houston area. They have 500 students in their welding program.
Is that right?
500 kids in that.
Wow.
And now they're marrying AI with welding. They're looking forward with this stuff. So Matt and I are going to get into a lot more. We're going to share a lot of the conversations that we have with folks when we come back right after the break. We'll see you in a minute.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners. insurance to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back, everybody. Thanks for spending some time with us here this morning or this evening, wherever you might be out there in Real Investment Advice Show land. Appreciate your time. Matt, good to see you. So, before the break, Matt and I were talking a little bit about, the cost of college, cost of school, how, younger professionals these days are looking at, hey, does it make sense to spend, 4 years of, college tuition? Should I saddle myself with this debt when I come out of school? Or, maybe it makes sense to look at some technical training like welding. And now it's kind of marrying these, two fields together, the old school with the new school, and how folks are looking forward. So when Matt and I are visiting with individuals and families, it's often that we visit with, the younger generation, the kids, the sons and daughters, and the grandchildren, especially as they're coming up through school, and getting them on the right path, and what makes sense for them with their retirement benefits. How does this 401k plan work? Does it make sense to look at pre-tax, or does it make sense to look at Roth? All these various items. But usually, when folks come to us to have that initial conversation, usually it's around some form of risk management, right, Matt? And usually it's around, hey, John, hey, Matt, I've got my portfolio here. I'm not sure. Their view of risk is, how can I best manage my investment portfolio? Like, what should my ratio of stocks to bonds to cash be? Should I own Procter & Gamble? Or does it make sense for me to own Microsoft? Or should I own Apple? Or look how much I have in Nvidia this year. Oh my goodness, aren't I smart? Right? So I think as investors, I think the media has done a great job of training us how to compare ourselves to the returns of the Standard & Poor's 500 index and all these other different quote unquote risk metrics out there. But what Matt and I and the team here, what we like to do, and yes, the portfolio management aspect of things is all very important, right? You want to control your risk as an investor, and you want to invest according to what your true risk tolerance is, right? And Matt and I and all of us here, we spend a lot of time having those conversations. But Matt, I think there is a much larger, overarching area of risk management that deserves more attention. And I think we all get so wrapped up in stocks and bonds and mutual funds and exchange traded funds and yada, 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 yada. But let's talk a little bit about some bigger risk management items like estate planning, liability protection. You got a rental property out there? Is that in your name, or how do you have that structured? right? I mean, there are some much bigger areas of risk management that we all need to focus on. And so Matt and I and the team here, we like to focus in on those aspects of your life too. So Matt, let's talk a little bit here about, let's try to kind of start a little bit high level with the estate planning piece. You know, what are some things, or what are some documents, what are some common themes that folks really need to pay attention to or think about in this space?
Yeah, that's a great point. You know, the first thing that comes to mind with me is what's going to happen to me right now. And what I'm talking about is, you know, what happens if I go to the hospital? What happens if I get in a car accident? What happens if any of those, you know, unforeseen events takes place? And so there's 4 essential documents, I think, that everybody should look at in terms of how to mitigate risk in the estate. But there's 2 parts to an estate, right? There's what happens when I'm alive, and then there's what happens after I've passed away, right? And so we like to look at those 2 aspects separately. And the first piece of what happens when I'm alive are addressed really by 3 documents, you know. And so back to the medical side of it, you know, if you're in that car accident, you're unable to make decisions for yourself. Who's going to make those decisions, right? A lot of times for married couples, you know, the first response, or the first in line, as it were, would be the spouse, right? Typically because the spouse is just there, right, the majority of the time. And so that makes sense. And then, you know, who steps in behind the spouse? And it's really quite interesting, John, as you know, different strokes, different folks, and opposites attracts with all of that. So a lot of times the spouses won't necessarily agree on who is second or third in line for making those decisions. But even though you don't agree, right, you know, he's allowed to have his docs, she's allowed to have her docs. Mm-hmm. And so ultimately you want to have a pecking order. It's called a medical power of attorney. You want to have a pecking order of 1, 2, 3 persons. What if that person's out of the country? What if that person was in the car with me, right? What if that person just simply doesn't want to make the decision right now?
Yeah.
Right? Who steps in?
Yeah, and so talking about that medical power of attorney, and you were even talking about a financial power of attorney there beforehand, right? If so, heaven forbid, let's say I'm out here on I-10, I get in an auto accident and I'm injured, I'm still alive.
Right.
But I cannot make a decision. I am incapacitated,
Sure.
right? So my wife, Shauna, is my durable power of attorney. And that term durable is key.
Right.
Because if she is just what they call a full power of attorney for me, or a regular power of attorney, upon my incapacitation, that full power of attorney becomes null and void. It is no longer legitimate.
Right.
In order for that power of attorney to survive my incapacitation, it has to be durable.
Durable.
It's got to be durable. That's the only way that financial institutions will act. If my wife walks into a bank where we have an account and she says, and maybe that account's just in my name, and she walks in there and she's like, hey, my husband's in the hospital. I'm in a coma, or I'm in an incapacitated state, and I need to get into this account to pay bills or what have you. Are you his durable power of attorney? No, I'm not. No dice.
Right.
It's not going to happen.
Yeah. Well, I mean, banks typically, there is no risk too small for a bank to avoid.
Yeah.
You know, banks really don't want to take the liability. That's why a lot of big firms hate to use the word fiduciary to their clients. They don't want to have that level of responsibility, because that level of responsibility ultimately relies or implicates that they might be liable to some regard. So if that power is not durable, if that power is not all encompassing, and you walk into that bank and say, hey, listen, I have bills that I need to pay for whoever it is, my husband, my father, whatever it might be, the bank's going to say, well, you know, go get a letter from a doctor that says that this is all true. And it really puts a burden on that person when it's already a difficult time that they're dealing with you being in the hospital, to go in and do this extra legwork and kick this around. So the banks, you know, and it's understandable why they do it. because they don't want to say, okay, well, look, we'll take this power, even though it's not durable. We'll take this power and let you execute, and then you take all the money and run off to Jamaica or whatever. Right. So the bank's trying to avoid and protect themselves to some degree, but what it ends up doing is harming you as the person who's incapacitated.
It does. And so as when we're visiting with individuals and families and we're having those conversations around, portfolio management, risk management, all of those things, I always say, hey, Mr. or Mrs. Client, I'm about to ask you a really fun question. We're going to get to the fun stuff right now. Let's talk. Hey, so tell me.
Oh boy, let's deal with this.
What estate planning have you done? Tell me about what documents you have in place. Most of the time, the two heads, they look at each other, they look back at me, and they've got eyes like Rodney Dangerfield. And they say, you know what, John?
Take my wife.
We haven't done that yet. We've been meaning to get that done for the last 10, 15, 20 years.
Sure. And talking about these things is difficult anyway. I mean, who wants to think about and deal with the mortality and all of that sort of stuff? And Americans as a culture, we tend to, be private about these types of things when, really the best course of action that I've found with clients is to be open and honest with, those that are impacted in whatever way by these decisions that you're making, just to allow them the freedom and the peace of mind to know not only that there's a plan in place, but also what their role in that plan might be. It's many times we've seen, and it's happened, I think it was just a couple of weeks ago, John, we were working with some clients on their estate planning piece, and they have two daughters, and daughter A is great with the money, but daughter B is the one that they wanted to say, okay, look, that daughter needs to make medical decisions for us because I think she's going to have the emotional fortitude to go in and cut through the baloney, as it were,
right,
and not make a rash decision when it comes to my health.
Yeah, and just to be clear, Matt, myself, the advisors here, just to let everybody know, we are not estate planning attorneys. Right, we do not prepare wills. We do not write trusts.
Or do your taxes.
We do not prepare your durable powers of attorney, your medical powers of attorney. But when we are visiting with individuals and families, we are happy to have these conversations to what we like to say, we will frame these with you.
Right.
And give this some thought. So that way, by the time you work with an estate planning attorney and you meet with him or her to have these documents prepared and put into place, you already have a sense of what you want to do and what you want to accomplish. And we're happy to work with the client and the estate planning attorney. We all collaborate together. So that way the goal is, maybe we can save you a little bit of billable time.
Well, not only that, but also, and without getting too far into the weeds, right, as we're trying to keep this sort of high level in the limited time that we have. But, things have to be titled a certain way. Things have to have the correct beneficiary designations, right? And so it all needs to be coordinated. A lot of times the attorney will write beautiful documents, but they were never executed properly because there was nobody that was sort of quarterbacking the whole process. So that's sort of our role, and that's what we do. So I appreciate the disclaimer. But in the end, our involvement can only be accretive, I think, to the whole process.
I agree. And there's a little bit more we want to cover on this topic when we come back after the break. So, stick with us right here on The Real Investment Show. We'll be right back, all right?
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I grew up in this little bitty town called Lake Jackson. This town was so boring. They named the streets this way, that way, circle way, anyway, and which way.
The Real Investment Show podcast.
There wasn't a lot to do. So on a weekend, everybody would kind of get together and they would drive to Pearland to the flea market. The whole fun of it was trying to negotiate. So you could leave with somebody else's piece of crap that nobody wanted. And you say, I got a hell of a deal on this thing. I chewed the guy down to $8 on this rusted wheelbarrow that I bought.
At realinvestmentadvice.com.
I'm going to go home and spend $30 fixing it up. But hey, I got it. Cheap.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, welcome back, everybody, here to the Real Investment Show. I'm Jonathan Penn, certified financial planner. All my friends, family, clients, they all call me John. Do the same. My wife, Shauna, I know when I'm in trouble. I know when I'm in trouble, Matt, because my wife, I hear Jonathan.
Uh-oh.
That's when I know
the shoe's about to drop.
It's about to get on right there.
But do you ever say, hear me out, Shauna?
No, I usually, that usually doesn't end well either. So, but we appreciate y'all being here. Matt Doyle, MD. His initials are MD,
Yeah.
a financial doctor. And of course, Brent, Mr. Brent Smooth Clanton, keeping it all together here. I love this, what you shared with me this morning, Brent. So Brent always very upbeat, always whimsical, which we really appreciate. He shared this quote with me this morning. Chips and salsa while you wait should be a thing everywhere, not just at Mexican restaurants, because Matt was talking about restaurants a little bit earlier. Trip to the bank, chips and salsa. Getting your oil changed, chips and salsa. Therapy session, chips and salsa.
I like where this is going.
You can't tell me that you don't deserve this after the last few years.
Do we start a petition or a GoFundMe? I mean, how do we get this moving?
I think we take it to the front desk here.
Okay.
Yes.
Let's start small.
Right.
Yeah.
And it'll spread.
I like that idea.
We could probably get the entire 8th floor to do it.
Okay.
Like homemade salsa competition. We could really go all in on this.
Well, I mean, we should have homemade chips too.
Oh, I like that.
You know,
But
do it right.
And I've got to add one more thing to this: the guacamole. Got to have it. Brent's saying no.
It's hard to keep it fresh.
Well, that's why you just got to eat it on one sitting. you don't give it a chance to go bad.
So people walk in. How long have you been waiting? Well, the guacamole's brown.
That's a good point right there. Right.
Well, people are particular about their guacamole. I mean, there's a lot of different recipes for it too,
I'm
right?
I'm a guacamole snob.
Are you?
I'm a coffee snob. So I'm a coffee snob and a guacamole snob. I can't help it.
You walk into HEB and you're feeling all the avocados. You're the one who's.
I am.
Okay.
I'm a lingerer.
Okay.
I am. I can't help it.
Got to have just the right one.
See, so we like to have a little bit of fun here too, folks. So hopefully we're making you smile a little bit, keeping it light, a little informative. If you like what you're hearing, if you're liking the information so far, do us a favor. Hey, go by our YouTube channel, hit the like button. And before Matt and I continue on with what we were just talking about in the previous segment, hey, if there are particular topics or questions or things on your mind that you are concerned about or you want us to discuss or cover, chances are if those topics or areas of concern are on your mind, they're on the minds of others too. So, hey, do us a favor. Reach out to us. Reach out to us on our website. Go to realinvestmentadvice.com. Reach out to us. Let us know what's on your mind or what you want us to talk about, and we're happy to work that into the program here. All right. So now we'll get back to it. So Matt, when we were talking about kind of these, maybe the 4 documents. I know there's some other documents that we want to cover here, but you mentioned a great point right as we were wrapping up the previous segment about trusts. And if you have a trust created, how many times do you see where a trust is created, but then folks fail or they just don't get to putting their actual assets in the name of the trust? What do you see there, and what kind of issues could that possibly lead to?
Yeah, that's a great point. And so, there's 2 types of trusts really when you're dealing with estate planning that are commonly used. And one is what's called a living trust. And a living trust is designed to give you privacy. Any probate item is public, right? So if you have to go to court, go through the probate procedure, all of those records can be reviewed. And so by having assets in a living trust or a living will, that avoids the whole process. Similar to, if you have an IRA, you put a beneficiary designation, or an insurance policy, you put a beneficiary on it. Those monies, just transfer to that beneficiary regardless of what the will or the trust says. So, back to your question, John, how often are things not styled? It's quite often, really, because you forget about this or that. A lot of times if you're financing a car, the dealership isn't going to put, the John Penn Trust as the lien holder on that car or whatever. So you forget, right? And then the car gets paid off and you don't retitle that asset. So typically when you do have a living trust, when that's the recommended path, you have what's called a pour-over will, and the pour-over will is designed, as you know, to catch anything that was forgotten, right? Because those structures can unwind pretty quick if there's assets that are not titled correctly. So then that brings us to the other type of trust that we typically see, which is a testamentary trust, right? A trust that's created as a function of the will. So it doesn't actually exist until probate happens. And these types of trust in particular are very special and very unique because what they do is after death, if you, for example, if you pass away, your beneficiaries in those situations get certain benefits that you just can't give to yourself, right? They get creditor protection. So talking about that car accident or that car wreck, if you're at fault and you have a trust that was established by mom, if you're at fault in that accident, those assets cannot be attached to, they cannot be gotten by a lawsuit, right? Similar to in Texas and most states, your house is protected from those types of liabilities. Your primary residence is protected from those types of liabilities. So too are trust assets that you leave at death to the next in line. So 2 different things, right? One's a living trust. They typically use your Social Security number. They're not legally a separate entity. They're from a tax perspective, they are you. But at death, they offer you that privacy piece, right?
Yes. Yeah.
So that's basically the two main types of trusts that we see, which gets us into our next point, right? And talking about the 4 documents that you need, we talked about the medical power, and that's the second document is you need a will,
right,
or a living trust, or with a pour-over will,
right. So what about a HIPAA, or what is that?
Sure, yeah. So that's a good question too, right? With that medical power of attorney, you are allowing or designating who has the authority to make decisions on your behalf in a medical situation. Now, strangely enough, the way the laws are written, the HIPAA law, gosh, I can't remember the acronym right off the top of my head.
Health Insurance Portability and Accountability Act.
There you go.
I
Thank
cheated.
you.
I wrote that down. I'm just sharing that with everybody, okay?
Yeah.
There's not enough coffee for me to just kind of rattle that off this morning. So, but go ahead. Sorry.
Well, ultimately, that's a privacy law.
Right.
That's all that is. And that says, who the doctor is allowed to disclose information to, right? So when you go to a doctor and you have insurance, you'll sign a paper that says you can talk to my insurance company for billing or whatever. So the HIPAA authorization is the same thing. And I know it sounds real weird, but I give John the authority to make my health decisions, whether I need to be unplugged or not. But in order for him to make that decision, I have to sign a HIPAA form that says John he's allowed to have this information. So those two work in concert.
And so real life example here. I was visiting with a lady a couple years ago now, and she lived in kind of a more rural area outside of Houston, kind of more smaller town where everybody knew everybody. Right, very small town. Everybody knew everybody, and everybody knew where everybody worked. And I had this very conversation with her about her estate planning documents, making sure she had her powers of attorney, her medical directives, her HIPAA. And she said, "Well, I don't need all that stuff. Everybody here, we all know each other. If I show up at the hospital, Sally Joe down the hall here, she knows me, she knows my kids, she knows my whole family. I'm not going to have to wrestle with any of that stuff." And I said, "Okay, well, do you travel?" "Well, yes, I do."
Right.
"Okay, do you travel outside of the United States?" Outside of the state of Texas? "Well, yes, I do." "Okay. Well, what happens if you need medical care and you're in Colorado?"
Sure.
Right? So what are your thoughts around that, Matt?
Well, this is a very interesting point. And, that is more is to the point. That's why you want to have, when it comes to your medical power, you want to have a pecking order of these are the people in line to make these decisions, right? If, for example, you give that power to somebody who is in that car accident with you while you're traveling out of state, you need somebody else listed on that document that can be reached to make those calls and that decision. The HIPAA authorization, HIPAA is a federal law. So once that document is signed, that's basically good in all 50 states. The medical power is at least here in Texas, is a state form you download from the state, and it doesn't really matter which attorney you get. You're just going to access that. They're going to pull the same document for you, but each state will have slight variations in language, but it's generally not an issue. If you have a Texas document and you travel to wherever, Florida, New Mexico, New York, wherever, and you have that document on hand, then 9 times out of 10, I've never come across a situation where the hospital or the doctor wouldn't recognize it. Yeah. Which again gets to the point. When you're traveling, who has these documents with you? Right. Generally nobody. So in the end, what we do for our clients when we're doing financial planning, we have a software tool that has a vault. Right. So we can upload, or you can upload into your vault an electronic copy of this. And if you are traveling, you or whoever has access to your vault can download that document and show it to the hospital, show it to the doctor. So it's always, quote unquote, with you as long as you've got that internet connection.
Yeah, and that way you don't have to lug all these documents with you. It's very efficient, and it's a great way to keep this information stored. Matt, all great points. Hey, the show's going by fast. We got one segment left. Stick around with us. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back to the Real Investment Show.
Thanks for being here.
We appreciate y'all spending time with us wherever you are out there in RIA land. So Matt and I here, we've been talking about the real fun stuff, I like to say, the kind of the getting down and getting into the deep stuff in the relationships that we visit with individuals and families. Because we always, you know, we want to marry this all together, right? It's very important to talk about your investment strategy and what sort of risk management approach are you taking with your investable assets, you know, those dollars that you've worked so hard for to save and invest, so that way you can now, you know, continue on and, you know, do the things that you and your family want to do. You know, what is that risk management strategy from an investment approach, a portfolio approach? But then outside of the investment management side of things, outside of that risk management, there's a whole other area of risk management that we need to pay attention to. And so here, you know, as our advisor colleague Rich and Danny, as our colleagues say, we want to look at this holistically with you guys, look at all these different moving pieces and how we can bring this all together for you to drive this all moving forward for you and your loved ones. So Matt and I have been getting into the always fun topic of, you know, looking at your estate planning. And so Matt has been covering, hey, here are some basic documents from a high level, some things that we all need to consider as we put this into our portfolio of documents for our estate plan. So now let's say you've had your estate plan in place. You've got your documents. You're all set. Matt, what would be a reason to have the estate plan reviewed or updated, or how often should somebody have their documents reviewed?
Well, that's a great question.
Yeah.
And I think the simple answer is whenever there's what I would call a material change. And a material change might be in law, it might be in taxes, or it might be something that's happened in your situation. You know, when I first started in the business, the amount of money that would pass tax-free at death has changed. Magnitudes of change. So that has, in turn, changed the way we handle estate planning. So that would be a factor. If something has happened with your health, and there's now more considerations. If you've gotten remarried, that's a reason to look at or relook at your documents. If something's happened with your beneficiaries, one of your children unfortunately passed away, things of this nature. Any major life change, I think, is a time, and again, whether that's an outside influence or something that you've chosen to do, is a good time to revisit those documents.
Something else too that I've noticed really over the last year, close to 2 years, it seems that more and more individuals and families that I'm visiting with, and now that we're visiting with, Matt, they're not just wanting to spend time in the United States. They want to split time. They want to travel more.
Sure.
And maybe they want to have time here in the United States where they're closer to their grandbabies, right, and closer to their family. But then they also want to maybe spend some time for a part of the year in Italy or France or the United Kingdom or Germany or Sydney, Australia. We're very blessed to work with folks all over.
Sure.
And while it's so important to make sure that you have U.S.-based estate planning documents, hey, if you're spending time for months on end overseas in a non-U.S. country, you know what? You need to have estate planning documents that are specific to those areas too.
Sure.
Right?
Absolutely. I mean, the estate planning piece varies drastically from country to country. And, what I've learned over the years of doing this, the state laws or rules that we follow as far as taxes and inheritance are actually pretty cheap compared to the rest of the world. In the United States, an estate is based on, for example, the person who passed away has X amount of dollars. But in some countries in Europe, France in particular, it's based on who is inheriting it and how far away are they in lineage. So a child, a direct descendant like that, might have a lower tax burden than, say, a third cousin would. And so that's why there's a very specific way that money passes in some of these old world countries, because the laws are written that way. So typically you want to have documents in the U.S. that say, specifically state that this document covers my U.S. assets only. And if you've got a home in Brazil or Guatemala or wherever, these documents cover these assets in this country only, because you don't want to have some kind of, intra-country war going on for your estate.
That's right. And like one of the clients that I work with, her residence here in the United States is Michigan, but she's currently on a teaching mission in Honduras, and she's been there now. This will be her second year. And so in a most recent conversation I had with her, I just asked her, I said, hey, if you need medical care or something should happen to you there, do you have some things set up in place? And she was very quiet. And she said, I never even thought about that. Nobody's ever even thought to ask me about that.
Those questions.
So It's just, our job here as advisors and as fiduciaries is to look out for you and to look out for your best interest. And so we're here to kind of ask you some questions. We're here to prod you a little bit. We're here to help you, to remind you to eat your vegetables every once in a while, right? As much as I love to be a carnivore and eat my steak or, my chicken or whatever that is, you got to get some greens in you every once in a while too. And so that's our job. Well balanced, right? So go ahead.
And well, ultimately, we respect, John and I, we tell our clients this, continually. The fact of the matter is it's your money.
Exactly.
Right? You've saved it. You've earned it. Nobody cares more to protect it than you do. Our job is to really be a guide, really to educate and make sure that you have enough information at hand to make those decisions. We don't have a dog in the fight. It doesn't matter to us if you leave your money to this person or that person, or you want your estate built this way or that way. The question is or the point is rather that you've given it thought and considered what those risks might be. Because back to the point that we started with, there's more risks out there than how much money do I have in tech today? Right. Not that that's not important. There's just other risks to consider.
Yeah, and right now too, we're 32 days away from the election, so that's on everybody's mind right now. What is going to be the outcome of the election a little bit later this year? And so could we see a little bit more market volatility between now and then? And the answer is we could. And if, listening to Lance and Michael here on our investment team, across all client portfolios right now, they're holding a little bit more cash or funds in the money market right now by design, So that way, if there are some healthy pullbacks to the market here between now and let's say election day, when I say healthy pullbacks, we're not expecting a 25 or 30% pullback, but if there are some healthy pullbacks, 3%, 5%, 7%, maybe a 10% pullback to the market, hey, it gives them the opportunity to use that cash to nibble, to get some things at a better value, right? And just to take a measured approach with this. And I know I just said a healthy pullback of 10%. You know, Matt, you and I have conversations with clients throughout the week where I routinely tell folks, in any given year, normal market behavior is a up or down swing in that 5 or 10% range.
Sure.
Right? That's healthy. That is normal market behavior. It's just that the media, when things happen like that, oh my gosh, you know, don't look at the headlines. They're going to smack you in the face, right? Oh, the world's coming to an end. The market's getting crushed. The market's getting obliterated, right? So in addition to, you know, all these various financial aspects that we help people discuss and cover, we're kind of like your emotional counselors too. We wear a lot of hats here, right?
Sure.
So, so continuing on a little bit more with this theme around broader areas of risk and where we need to protect ourselves. You know, I know we just spent quite a bit of time talking about the estate planning piece, and that is real life. You know, Matt, we visit with a lot of folks too who own rental property.
Correct.
And a lot of times we see that rental property is still in the individual's name.
Correct.
What kind of risks are they subject to potentially leaving the doors open for in that case?
Yeah, I mean, it's a valid point, and I am surprised at how many times we come across this. And again, I think a lot of times it has to do with the fact that it was simple to set up that way, right? I have a friend that has said to me many times, the easiest way to make money in real estate is to go borrow money from the bank and have somebody else pay it back and sit around and wait. And so you may have a home that's paid off, and that's in your name, your primary residence, and then you get a loan in your name to go out and buy another property. Because if you just start a brand new company with no money, no history, bank isn't going to loan you money to go out and invest in real estate. So you're required in a lot of cases to have that asset in your own name. But what happens when that gets paid off? That gives you the opportunity to move that asset into another vehicle, another structure. And why would you want to do that? Well, for numbers of reasons, right? Again, back to the estate piece. If you've got property, if you live in Texas, you know, just because we're here on the radio locally, but if you're here in Texas and you have a property in another state, when you pass away, if that asset is in your name, then whoever is dealing with your estate is going to have to go through probate over there, right? So you want to make sure that that asset, this is why, you know, a lot of folks gravitate toward living trusts, that asset is titled in a way that it can pass without this person having to fly all over the country and deal with this. The other thing is, again, back to the liability piece, a liability thing. So, you know, you're opening yourself up to, and this may be a discussion, a table for the future, but you're opening yourself up to a lot more liability, I think, than you might need. Exactly.
So, as always, we need more time. All right? So
come back and see us again, guys.
So you know what we're going to do? Matt, let's pick this up where we left off next Friday.
Okay.
Same bat time, same bat channel, right here on the Real Investment Show. But in the meantime, folks, if you have any questions or other concerns that you want us to talk about, stop by our website at realinvestmentadvice.com. Let us know what's on your mind, and we can incorporate that into our conversation as well. And again, if you like what you're hearing, go by our YouTube channel, give us a thumbs up, and we really appreciate your time and joining with us this morning. Matt, thank you. Brent, thank you. Everybody have a great rest of the week. Thanks so much.
Bye-bye.